Assalamu alaikum. Welcome to lecture 19 of ATX. Earlier we have finished with lecture 17 and 18 on corporation tax, computation, the way of calculating corporation tax, the rates, various reliefs. Now we are moving on to corporation tax losses. Here we are going to go through various loss relief options on how to deal with corporation tax. Now, whenever corporation tax is asked, you should be very well prepared for the loss relief because you will get one question on loss relief. Now, here we are going to focus on loss relief for single company, choice of loss reliefs, restrictions on loss relief, and summary. So, overview is the types of relief, choice of relief, and restrictions on relief. Now, much of this lecture is like a revision of what you have covered in tax, so we can go quickly. The new areas at ATX are this: treatment of non-trading loan relationship deficit, NTLR, and restrictions for the use of some losses. There are professional skills that could be tested in your exam questions involving this question, that is loss relief, such as how do you evaluate the options for relief, your way of communicating to your client which options to use, or your commercial acumen in relation to availability of reliefs. So this is a relief for trading losses. There are various type of losses. It could be property losses, then we can have net loss, right? Chargeable net loss, right? So this is trading losses. You can carry forward, you can relieve it in the current and the prior year, that is 1 year back, and terminal loss, that is when you are ceasing your trading. So carry forward is carry forward, and this you can carry forward against total profit before your QCD, that is qualifying charitable donation. You have to claim it, and partial claims are allowed. Then you can relieve in the current period before you carry back 12 months. That also against total profit before QCD. Your QCDs may be wasted. You have to claim. Partial claim not allowed when you are carrying it back or in the current period. Next, terminal loss carry back 36 months, that is 3 years. This is also against total profit before QCD. This is on LIFO basis, that means last year first. Okay. Claim and partial claim not allowed. Then total loss planning, you have to consider the tax rate, the cash flow, and the wasted QCD. So whenever you are advising your client which one, whether to carry forward, terminal loss, or current, you have to see what are the tax rates in each year, what is the impact on the cash flow, and are you going to waste any of your QCDs or not. Now carry forward. So the key features of this relief is you can carry forward in the future. It is total profit before QCD. It is possible to restrict the amount of loss relieved. Loss can be carried forward indefinitely, forever. No need to make a current year or prior year claim first, because straight away go to carry forward. A claim must be made within 2 years at the end of the accounting period in which the loss is relieved. Now, trading losses. So the current year and the carryback, you have to claim within 2 years of the end of accounting period in which trading loss occurred. Carryback, you can only consider after claiming in the current period. You can't carry back and then come to current period. No, first current period, then carry back. Any trading loss remaining after the current year, you can either carry back, okay, you can carry back, and carry back is optional. When you are seizing the trade only, terminal loss relief is there, okay. So you take the trading loss of the last 12 months and you carry back 8 to 36 months on a LIFO basis. If there are trading losses remaining after the current year or carry back, or no such claims are made, let's say you have claimed the current and the carryback, or you have not claimed the current and the carryback, the loss will be carried forward indefinitely. Now, this is a pro forma. This is what you have to do when you are having a loss. Let's say you have 3 years, 2022, 23 and 24. So first we are having a trading profit in 2022 and 24. 23 no trading profit. It's 0. Then we have other income in 22, 23, 24. Net chargeable gains. Then total profit. Now you deduct your loss relief. First current year, that is 23, then carry back 22, then carry forward 24. Less QCD, wasted, and 24 will not be wasted. Taxable total profit will be 0 for 22 and 23. Unlike income tax, for companies, there is no maximum deduction for current period and carryback losses. If you recall your income tax, there were restriction for the loss relief that you can deduct in the current and the carryback period. Here, for companies, no restriction. That's good. Now, loss making period of less than 12 months. Length of the loss making period is not important. You will get the full relief against total period before QCD. Remaining loss can be carried back. Now, short accounting period prior to the year of loss. If your accounting period when you are carrying it back is less than 12 months, what happens? Profit of the accounting period partly falls in the carryback period, must be time apportioned. Loss can be offset against those profits which fall back within the current carryback period. So remember, the loss is offset on a LIFO basis, later accounting period first. Now let us go through a small question. Illustration 1. Short accounting period prior to the loss. So you can see here, the loss making year ended is 31st December 24 is the 8th month. Okay, 8th month ended 31st December. Then the loss can be carried back. Okay, so you can carry against the 8th month and then the sufficient loss. Okay, 8 months. What about the 4 months? So the 4th months of the total profit before QCD of the 12 months to 30th April 2023. It's 8 months, right? So it's from May, June, July, August, September, October, November, December. It's from May, 1st of May to 30th, 31st December. 8 months. Okay. This is 2023. 2024, it was a year ended. You are making a loss here. So this loss you can carry back here. It's only for 8 months. The remaining 4 months you can carry back even further. Okay. So it is 1st of May to 31st December 23. 8 months. Okay, here it is 1st of Jan to 31st December 2024. This is 1 year. Your losses here. Okay, and here the 12th March to 30th April. So here, when you are carrying back this loss, let's say some 20,000 loss you have. This you are carrying back here. When you are carrying back, only 8 months is relieved. You can carry back 12 months. So once more you are carrying, but only 4 months out of this year. 4 months you are taking. Okay. Next, this is new. That is non-trading losses. All this while we have been doing trading losses. Now non-trading losses. Non-trading losses are other losses other than trading losses. Capital loss, property business loss, NTLR and management expenses. So you could be asked on any of this. So you have to know what you have to do with the current year carry back and carry forward. So in the current year for capital loss, only against chargeable gain, you can get it relieved. And it's automatic. Partial claims not allowed. Not applicable for you to carry back your capital loss. Property business loss in the current year against total profit before QCD, same like trading profit, it's automatic. See, wherever it's automatic means you don't have to claim. But trading losses you have to claim. Partial claims not allowed. Partial claims are not allowed in the current year for both capital loss and property business loss. Carryback is not applicable for property business loss. Non-trade, once again total profit before QCD, you have to claim within 2 years of the end of the AP. This you have to claim. It's not automatic. Within 2 years of end of accounting period of loss, partial claims are allowed. That's the difference. This you can carry back against NTLR profits only. So NTR loss with NTR profits. You have to claim once again within 2 years of the end of AP of loss. Partial claims are allowed. So it's the same. Next. Against total profit before QCD, this is automatic for management expense, and partial claims not allowed, not applicable. So the only difference is in the NTLR. The rest all are similar. If you see, capital loss, property business loss, and management expenses. Now, carry forward and group relief, same for the same type of losses. You can carry forward against future chargeable gains only. Automatic. Partial claims not allowed. You have to offset. The offset, remember, when you're carrying forward, is restricted to 5 million plus 50% of the remaining gains after deducting 5 million. Group relief is not, it's not there for capital loss, but can reallocate the capital losses within a gains group. Next. Property business loss you can carry forward against future total profit before QCD, claim within 2 years, partial claims are allowed. X and group relief, excess current year and brought forward losses. Then against NTLR, carry forward against total profit before QCD, claim within 2 years, partial claims are allowed. Same current year and excess brought forward losses for group relief. Management expenses, total profit before QCD, claim within 2 years, partial claims are allowed. Excess current year and brought forward expenses for the group relief. Now let us do a question. Illustration 2, loan relationship deficit. So you have to show the taxable total profit, showing how the loan deficit may be relieved. You have to know all the rules of the loan relationship deficit. So trading profit before taking interest 105,000, property income, interest receivable 21, interest payable 42, and legal fees in respect of loan stock is 6, interest payable on loan to fund working capital 8,000. Now what do you do? Take the trading profit and deduct any interest for trading reasons. So if you see, this is interest receivable on building society deposit, not for trading. Interest payable on loan stock used to purchase rental property, not for trading. Legal fees payable in respect of above issue of loan stock. Interest payable on loan to fund working capital. This is for trading purpose. You have to deduct it from where? Trading profit. So first, we'll go here. From trading profit is 105,000. You deduct the interest payable to fund working capital 8,000. Because it's for trading reasons. I'm writing working capital. Okay, you can write the whole narratives. Next, adjusted trading profit. $97,000. Next, add property income. Property income is 62,000. $159,000. Okay. So this is gone. This is gone. The rest all is to do with the interest. Then less deficit on NLTR. There is a working required for this. Okay, so let us quickly do the working. How do you do that? It's for non-trading reasons, right? All the other interests. So interest receivable, you will add 21,000. Then you will deduct the interest payable to purchase rental property. I'll write RP rental property, 42,000. And there was an fees that is payable to issue fees payable on loan to purchase rental property, 6,000. In case you forgot the figure, let's go up and I will show you. This is the interest receivable, this is that interest, and this one, the 6,000. This comes under non-trading relationship, non-trading loan relationship. So it's a deficit because we are having interest payable more than receivable, 20,000, 27. This you deduct from here. And 132,000 is your TTP. Okay. So you have to calculate taxable total profit. That's what they asked. That's what you have done, TTP. Approach for loss computation. This approach, you can use it in your ATX exam. Very helpful. We'll go step by step. Okay. So if you see a question that involves company losses over several years and include one or more of a property, non-trading loan relationship, and capital losses as well as trading losses. That means you have all the types of losses: capital loss, trading loss, property loss, that loss, this loss, and a company running over several years having losses. Then you have to follow a methodical approach. So step 1, draw the TTP pro forma. You have to leave some space. Remember to leave that space for loss relief. You can do this in Excel very easily. And you have to set out the years side by side. Next, fill the pro forma with TTP information provided to you, ignoring the loss relief. Immediately you can write loss relief. You have to keep some space. Step 3, if non-trading losses, identify them separately in a separate loss working and show the amounts used and carried forward. You have to deal with the property loss and NTLR deficit before using trading loss. Step 4, in the year of trading loss, trading income is nil. You have to keep a separate working for trading loss. If there is losses in more than one accounting period, keep a separate loss working for each loss and update the working as the loss is relieved. Step 5, consider the loss relief options. You have to consider all the options available. You have to read any guidance given to in the requirement on loss reliefs and then see the objectives of the company. So where there is more than one loss to offset, deal with the earliest loss first. Then if the question states that relief is to be obtained as early as possible, this will be the order of your set off in your question. You have to do the current year first. That means current year, then you carry back or carry forward. Okay, so current year claim followed by a carryback claim to the previous 12 months or 36 months for a terminal loss. If it's a terminal loss, you have to carry back 36 months. If not terminating, then just previous 12 months. But current year, then previous 12. Then you carry forward any remaining loss against total profit. This is not an option in a terminal loss question. That means for terminal loss, when you are ceasing your trade, you can carry forward. You can only carry back. Next, if the question asks you, identify and evaluate options available, consider the 3 options. Current year claim, followed by the carryback claim and carry forward excess. Current year claim and carry forward any excess. Carry forward only. You have to consider these 3 options and see which is the best. Identify, we are still in step 5 by the way. This is when we are considering the alternative options. You have to consider the amount of tax saving, how much QCDs you are wasting, and the cash flow under each option. Wherever you are saving more tax, wherever you are wasting less of QCD and cash flow the impact on cash flow is not so negative, you have to choose that option. And step 6, calculate the revised TTP after the loss relief that you have applied, that you have chosen and you have applied. Now let us do a question. Illustration 3. So here you have to calculate daffodil's TTP assuming loss relief is claimed as early as possible. Okay, so current year, carry back, carry forward, excess. Now you have 4 accounting periods, all year end at 31st March, 24, 25, 26, 27. Okay, so you have the loss here in 27, 25,000. You have sufficient profits in the previous years to carry back. Okay, now you have interest income, property income, chargeable gain, QCDs. There was a trading loss brought forward at 1st of April 2023 of 20, continues to trade after this much. Now, so we have the solutions with us. Okay, there are 2 trading losses. One is 20,000 brought forward, the other one is 25,000. One is this 25,000, the other one is this 20,000, and they're the separate years. So that's what this solution has written. One is in 1st April 2023, the other one is 31st March 2027, that you have to consider. So because they have made a phase as early as possible means what? Current year claim should be made, then carry back. The loss of first will deal with this 25,000 loss, this one. So you current year carry back. Okay, you can't carry forward here because they have not given anything. Of course you can carry forward, but you can't get it relieved. You can just say carry it forward, make a statement, but you don't have to carry it forward because you will be able to get it relieved. I suppose no, you have to carry it forward. Now remember, relief should be given for the earlier trading losses before relief is given for the later losses. What does it mean? 20,000. This is the earliest first. If it's a trading loss, and if you're having 2 trading loss, earliest trading loss has to be dealt first, then the later. So 2023 loss, 20,000 has to be dealt before 25,000. So this 20,000 you will set against total profit before QCD. You have to write all this. And then the offset will be restricted to avoid wasting QCDs. How do you know these rules? From that table that I've gone through. That's why you have to be very pro in this table. Otherwise you will not be able to deal here. Okay, the capital loss you can only carry forward and use against the gains. You can't carry it against the income. So we have a chargeable loss here of 700. And then for property income also we have a loss of 800 here, and QCDs 200 each. So now what about the property loss? So one by one you will talk about. First finish with the trading, then capital, and one after the other. Property loss, again total profit before QCD. As each loss is relieved, the loss working should be completed. There are many losses. You have to have a loss working. Otherwise, you will lose the track of it. What you are relieving, how much amount is left over, the balance. That's why first draw the corporation tax computation. This is your main table. Next to it, you need a loss working as well. This is for trading loss. Non-trading will all be grouped together. This is for non-trading loss separately. So now first when you're drawing the table, draw all the years. Start with the trading profit, interest income, property income, chargeable gain, whatever they have given. Okay, so wherever the profits is given as it is, you can copy paste. Wherever the loss is given, it will be 0. This is 0. Here property, there was a loss of 800. It's a 0. Okay, then what about the chargeable gains? We'll go to chargeable. So this is okay, this is okay, this is okay. Let's go to chargeable gain and see what happened. It's 0. It is 0 here. Here you are having 2,600, you are having 700. So that this 700 will get relieved in this 2,600 because only gains, the capital loss will only get relieved against the gains. You can't carry it with the income. So here also it will be 0. This then from 2700, sorry, how much was the figure? 2600. Take 700 out, then it will be 1900. This is the amount. This is your chargeable gain. Okay, rest all, there will be no impact because it will be total profit before QCD. Even the property loss that you are having here, even this one, both of this will get property total profit before QCD. So you will not get it relieved. So now you get the total profit. Till here you can do the working without any space, any tension. Then deduct your property loss relief. Property loss relief in the current year first. So you are having the loss in 26, this 800. So you will set it off. Once you get the total profit, deduct your property loss like this. Next. What's next? Capital loss, you have already set it. Now you're only left with the 25,000 loss. This is the only loss you are left with. Trading profit. So 25,000. So when you are setting property loss is done, remember the other losses has to be set off first, then the trading loss. So that's why property loss first and then the trading loss. So first you set in the current period. Of course, when you are writing, you first write the brought forward, then current, then carry back. Okay, the brought forward. So now, first if you see here, you have made a loss here. Okay. So now, the trading loss, just a minute. For the trading loss relief. Okay. So you need a working for this. You have 20,000. There are two losses in fact. One is 20,000, one is 25,000. So first 20,000 we have to deal with. Okay. And remember, when we are dealing with this 20,000, you can't waste your QCD. That's why this has to be kept. This has to be kept as 200. Because when this is kept as 200, you can deduct the QCD later on 200. Here also is the same thing. Here also is the same thing. Only here QCD could be wasted. 2027. Rest all it has to be 200. So because this balance has to be kept 200, remember the first loss you have made is in this year. 24. So if you set off entire 17,000 for this 20, you will have a 0 here. If you have a 0 here, your QCD will be wasted. You can't do that. You have to keep it. According to the rules I am saying, this is not according to my wish. It has to be like that. Go back and go through the table. So this, keep the 200 difference. So 17 minus 16, 800. Then you will be left with 200, from which you can deduct your QCD 200 and you will be having TTP of 0. Done. What's next? From this 20,000, 16,800 goes. What's remaining? For this you need this table. Loss working. You see, from 20 you have deducted 16 this year. Next year, the balance 3,200. Then you will be having 0. So that 3,200 you will deduct in the next year. Then you are wiped off with the 20,000. So from 12,900, 3,200, you are left with 9,700 minus 2, 9,500. Done. This is done. This is done. Understood. Coming to the third year. When you are coming to the third year, you are dealing with the next loss 25,000. Okay. So in the current year, first current year, 25,000. It is here. In this year. So first this year, then you go back. Here, nothing to carry back, only carrying forward. That's why no issue for the 20,000. So first 5,100 current. Okay. So first 5,100. Next you are left with 19,900. This carry back 12 months. That's why 19,900 carry back. Then you are left with 4,800, 200, this one. Here, since you have utilized everything, this is wasted. QCD is wasted and 0. Okay. This will be at the end, it has to be 0. Now we are coming here. So for non-trading, we have capital loss, we deduct our 700. You can just show it here, it is 0. And for property business loss, it's 800. We have used it against total profit, 800. We have done it on the table. You can show a separate loss working for it. Now coming to test understanding 1. It's of a similar question. 3 years we have losses in this year, and then we have capital loss here 3000, and then QCD. So assuming it's early as possible, compute the TTP for 3 period. Your answer should clearly identify the amount of any loss that are unrelieved. Sometimes question tells you any losses that are unrelieved. That also you have to write. Sometimes you don't have to write. Explain how your answer to A would have differed if they have ceased trading on this date. That means we'll have a terminal loss. So now let us go back and just you can copy paste this figure wherever profit is there. So trading profit, here it will be loss, and here it's a loss. Property income, you see. Okay, it's not a loss, it was 0. But for capital loss, 3000. So this 3000 you can get it relieved against this 9500, leaving you 6500 here and 0 here. Because chargeable gain, loss, capital loss only against gain. They have shown it here. So it's 0, 0 and 6500. Okay. Now, get the total profit. So you only have one loss, that is this year. So first you do the current year, that is this. Then you go back and take this also. Do you have anything else? So 78,300. Remember, this is not year ended. Okay, period ended. So if you see here, from June to March, so July, August, September, October, November, December, January, February, March is for 9 months only. This is for 9 months. That means from here 3 months you can still deduct 3 months from here. Okay, so when you come here, better, because this is very confusing, we'll straight away go to the loss working. You see, from here we deduct first this, then we take this. Here when we come, we have to take 3 months off this one, because this is only for 9 months. 3 months of what? 3 months of the total profit here. On this you can get it relieved. So when you take it is 21,650, and you still have this much unrelieved. That's why you need this loss working table to find this unrelieved amount. The question asked you. So 21, this is the amount, not the entire amount. So this is wasted, this is wasted, and then TTP. Now coming to part B, if they have ceased trading, how this will differ. See the question, please read the question. They told you explain, they didn't say calculate or to calculate the revised TTP. If they would have told calculate the revised TTP, you have to recalculate again. But the question told you explain. You see, the verbs matter a lot. So if this was terminal, the 78,300, they can carry it back 36 months. So the entire amount could be utilized. Then they will not have this unrelieved losses of 19,250. That's what they have written here. So following a current year claim, the trading loss of the final 12 months could be relieved against the total profit of the previous 36 months. Therefore, this unrelieved loss, you can carry it back and fully set off in the year ended 30th June 2023. That is this year. Fully you can set off, then there will be no unrelieved. Next, choice of loss relief. So factors that influence the choice of loss relief. These are the factors: tax saving, cash flow, and wastage of relief for QCD. Tax saving. You have to save or get a refund at the highest possible rate of tax. Prior to 2023, there was only one rate of corporation tax, that is 19%. Okay, so a claim to set losses against profit arising before 1st April 23 will therefore always save tax at 19%. Since the introduction of two rates of corporation tax with marginal relief, they have now introduced it. It may be possible to save tax at higher rates because now we know the main rate is 25%. So now the preferred order to claim relief to achieve the highest tax saving is against this. So the effective rate of tax saving, if it's for 2023, marginal rate less marginal, main rate less marginal relief 26.5%. There's a note rate. Main rate 25, small profit rate 19. Okay, so the effective rate of tax in the margin or the marginal rate is not provided in the exam. You need to learn this. You should be aware that this rate will only work if there are no dividends received from non-group companies. If you are not receiving any dividend from if you have a scenario involve dividends, then a full computation before and after loss relief would be required to calculate the corporation tax saving. Why is that? Because with dividends you get augmented profit. With augmented profit your rate changes. But if there is no dividend, there is no issue. You can get this rate straight away. Now next is cash flow. Cash flow will affect your choice relief. So a company may be prepared to accept loss relief at a lower rate if it results in an earlier receipt of cash. When you have to carry back a loss, what will happen? It will result in a repayment of corporation tax that you have paid earlier year. And if you are carrying the loss forward, it will only result in the reduction of a future liability. Therefore, for cash flow purpose, it is better to make the current year claim and then carry back the losses rather than carrying it forward, because carrying forward your loss will not have an impact on cash flow, rather it will just reduce your future liability. But in order to reclaim the cash or get a cash refund, earlier you have paid a lot of corporation tax, now you have a loss, you are relieving that loss in the earlier year, you can get a refund. So from the point of cash flow, it's beneficial to make a current year claim and carry back the loss rather than carrying it forward. Next, restrictions on loss relief when the trade becomes small or negligible. So this is a new part. Before going this, we'll do a question on the loss relief, choice of loss relief. Illustration 4, the marginal rate of tax. So here, calculate the corporation tax liability payable by each company and the marginal rate of tax on the additional profit of 10,000 earned by B. So A and B. You have to calculate augmented profit. Here there were no dividends, neither company received any dividends. That's why your TTP is equals to augmented profit. Total profit is 50 for A, 60 for B. So 50, 60. Now, because it's 50, it is at the lower rate. We know 50 is lower rate, higher is 250. So it is the small profit rate. And 60 is between what? It's between 50 and 250, upper and the lower limit. So you will get a marginal relief for it for B. Okay. Now, but it will be at 25%, the main rate. Okay. Now, so 250 is the higher, minus 60 profit, and this is the standard fraction we all know. No augmented profit, TTP is equals to this one. So this is your marginal relief, which you will deduct from here. That is 25% of 60. So this is your corporation tax. This is very simple. Now they are telling with additional 10,000 earned by B, what would be the marginal rate of tax? Okay, so the reasons have been written here. A limited, lower limit is 50. That's why small profit rate 19%. B, if they are having an additional 10,000 of profit, which takes it into the marginal band between lower and upper of 250. So additional tax paid by B compared to A would be what? The difference, this and this, which is this. Additional taxable total profit earned by B is 10,000. So the effective rate of tax on this extra 10,000 of profit would be this. What is the additional tax paid by A? It is this, over the 10,000 profit. Additional TTP into 100. So this is the rate of relief. You see, 26.5. So this is what you have to remember. It is the additional tax that they are paying on 10 and additional taxable total profit earned by B, 10,000. Margin rate on the additional profits of 10,000 because he is having 50, he is having 60. So additional 10,000 profit and the additional tax. First you calculate the additional tax that they are paying, that is 265 divided by the additional TTP, that is 10,000, and you get the marginal rate 26.5. So this is how you get it. Now let's read this as a note. The effective rate is on profits in the marginal band only. Remember, marginal band, if it's between lower and upper. The overall average effective rate of tax for B would be 12.50 over 60,000. Because this is the tax, this is the profit, this one. The overall average effective rate for a marginal company will always be somewhere between 19 and 20%. Meaning that even if using a loss to reduce the profit into the marginal band, it will still be more beneficial than just reducing profit to the upper limit. Understanding? Now, illustration 5. Choice of loss relief. So here, set out and evaluate the options for loss relief. In this type of questions, your professional skills will be tested, where mostly you are set to evaluate. So pay careful attention to this. You have to write it also. Okay, so you have one trading loss of 270 in this year, 23, 24, 25, and no property loss, no capital loss, QCD 1000 each, not received any dividends in any of the accounting period. So only the trading loss will be here, rest everything is same. Get the total profit, and it is 270. So because they have told you set out and evaluate the option, so we'll evaluate the option. Okay, deduct 1000, keep your TTP. So here we are leaving some space, brought forward current, we're not putting anything. This is before loss relief. Now first option, carry forward. So this 270, this 270,000, okay, you can set it against total profit before QCD. Wait, just tell me the year, 23, okay. Tax will be saved at the mean to 25%. As the loss will be set against profit above the upper limit of 250. If you see, the profit is above 250 for all. No, in this it's 250. Here it's the loss, and here it's less than 250, and here it's more. So due to the level of profit, there is no need to restrict the offset to avoid wasting QCD. Here, if you carry forward, you don't have to restrict the offset to avoid the wasting QCD. Because if you see this amount, total profit is more than 270. So full amount you can set off, still you will get your QCD. So you will not waste your QCD also. You don't have to restrict the level of profit that you are getting it relieved, and can save the tax at 25% because it is above 250. So this will be the tax saving. So we'll calculate the what? Tax saving according to, remember, tax saving. Options for loss relief is what? Cash flow, tax saving, wastage of QCD. So number 1 will save QCD. In first option, if you carry forward, full QCD will be saved. Okay. From the point of cash flow, there will be no impact because you will just reduce your future liability. That's why we need the tax saving. So 270 is the loss. Entire amount can be set off into 25. This is the total tax saving. So total tax saving is 67,500. And this benefit would be obtained when? When is the date? It's 31st March 25. So would be obtained on 1st Jan 2026. This is the due date for corporation tax. Why? 9 months 1 day from the date of AP, end of the AP. That's why. It's not a big company if you see the TTP. That it has to pay by installments. Next option is current, then carry forward. If you set in the current year, yes, you can set against total profit before QCD. But if you see the TTP, this, it's between 50 to 250. It's between the band. This is between the upper and the lower limit, the TTP. So the saving will be partly at the marginal rate of 26.5. Okay. So now it's in the current year. You can restrict it also in the current year. This is all or nothing claim. So 172,000 of loss will be set off, but tax will only be saved on 171 as the loss of QCD will be wasted. You see here. What was the loss? 270. It's 172 here, right? 171. So if you see here, how much? $172. So you can get relief to 172. Coming here. Yes, it's here. So it's all or nothing. All you have to claim or nothing. You can't claim partially. So 172, yes, all the loss will be set off 170, but tax will only be saved on 171 as the loss at the QCD will be wasted. Of the loss as the QCD will be wasted, that 1000 QCD. So what is the remaining loss? If you take 270 minus 170, this is the remaining loss. This will be relieved against total profit before QCD in the year end at the next year. Saving tax at main rate of 25%, because in the 25 big profit 25%. So let's do that and see. What is the TTP? 24, 171 minus 50, the lower limit. And it is at what? Effective rate, this rate. This is the tax saving. Okay. Now, so how much profit below the lower limit? 50,000 at 19%. And unrelieved QCD, 1000 into 0%. It will be 0. Because you are wasting QCDs also. So you will not save anything. Profits above, that is this 98. It's at 25. This. So if you add all, this is the total tax saving. If you see tax saving, compare it with the first scenario, 67,566. This is less. So option would lead to no tax being due for the year ended 31st March 2024. 31st March 2024, you will pay no tax. That means this due date, no tax. Because you will bring it in to the entire amount of 0. And a reduction in the tax due for the year ended. Due on this one. So here you will pay no tax, and here your tax will reduce on this date, the next year, because you will carry it forward. Come into the third, current year, and then carry back. So if you see current year and carry back, current year falls in the marginal, but if you carry it back, this is big. It's at 25%. So now this will be same at 171. Okay. So just wait a minute. This is as above, currently. So the year ended this one. It falls in this year. Remember, this year there was a single corporation tax, that is 19%. So this year, this falls in this year, so 26.5, and this year you will get 121,000. Just so wait a minute. It's so TTP here is 171. Okay, because it falls in the marginal, so the difference into 26.5, and then profits below the lower 15 into this percent. This is QCD is wasted this year, the current year, and then the balance will go back at 19%. So this is even less. But this option, because you're carrying it back, would lead to the repayment of the part of the tax for the year ended 31st March 2023, assuming it has been paid. And then no tax will be due on this year, that is 31st March 2024, the year when you are making the loss. So now what is the conclusion? You will go by option 1. Why? Highest tax saving, no QCD is wasted. However, if the directors are concerned with the cash flow, they may prefer option 3, because repayment of cash they are getting, which gives a repayment of part of the tax for year ended 31st March 2023. See, when you are giving a conclusion, it's always 2 or 3 lines, very short, brief, to the point, talking about option 1 and option 3. You have to compare, evaluate. Don't just say option 1 is the best, option 2 is the best, option 3 is the best because it gives the lowest tax or highest tax saving, and finish it off. No. Highest tax saving number 1, QCD, no wasted QCD number 2, and you have to talk about the cash flow. However, if they are concerned with cash flow, option 3 would be preferable. They may prefer. This is up to the director. You are just giving advice. You can't make a decision and say go by this. This is how your conclusion should be in ATX for all. This is best under this condition. But however, if they are concerned with cash flow, this option would be preferred or better, because it gives a repayment of part of tax on this date. Leave it. Now we are moving on to test understanding 2. Here you have a loss. It's the same, 24, 25, 26, 110,000. Property income, chargeable loss in this year. This 15,000 will get relieved with this 20,000, leaving 5,000 in 24. Here it will be 0, and QCD 3,000. Wish to relieve the losses as efficiently as possible. They didn't say early, efficiently. That means tax saving, cash flow, wasted QCD. 3 things. Do not forget. Now, advise the director. This is the nature of the question you will be tested in ATX. Which loss claim or combination of claims will achieve their objective, and quantify the tax saving and any repay. Quantify. How much? Quantify means amount and any repayment due. That means same question, similar question. So here you have to write it also. Okay. We'll see what they have written. First, let's talk about capital loss. Okay. You can set it against future gain, carry forward and set it against gain, because you can't set it against income. You can't carry it back also. Done. Number 2, as efficiently means what? Trading loss should be relieved at the maximum amount of tax. This means loss should be relieved against profit taxed at the marginal rate. Third, if you see in this date, company is paying at 19%. See, this conclusion they have given after they have got the, here also they have conclusion. Okay, working 1 is here. They have done a working before this. Okay, so let's say the profit is less than 50,000. It falls below the lower limit. That's why it's 19%. Small profit rate, because in this rate it's not 19, but if your profit falls below 50, it's 19. However, in the year ended 31st March 2024, Previous year marginal relief applies. In the last year, company is paying tax at 25%. There is a working 1 to it. So we'll go to working 1 and see. So here, you see, as I told you, wait, just I want to see the capital. Okay, this has to be carried back. Here you'll be having. Okay, so now when we go here it will be 0. Here you're leaving 20,000 and 0, 0. Wait a minute, sorry, I'm sorry, it's this one. This is working 1. Yes. So here it is 0. This is before loss relief. And this is 20,000. This is 0. Okay. Well, something is wrong somewhere, because okay, I'm sorry, there's a mistake that I've made. Earlier I told you this 15,000 will be set up against this 20,000. No, I forgot the rule. Capital loss you can't carry back. You can't carry back capital loss. You can only carry it forward. That's why this 15,000 you can't set it up against 20,000. I have realized that mistake when I've seen this 20,000 still here. Okay, so then you get this TTP, deduct QCD, get this TTC. If you have to select the best option for loss relief, you always have to first find the total profit, deduct QCD, get TTP. Then based on this you will decide your status. This falls between 50 to 250, marginal, between it's small, more than 250 main rate. So marginal 25, small 19, main rate 25. But here you will get a marginal relief also. How do you get the marginal relief? There is no dividend, so nothing to worry. TTP, that is 250, a higher limit minus this TTP 191 into standard fraction. This is the marginal deduct from here, and get your corporation tax payable before relief. You have applied this percentage here, okay? 25 to here, 19% to this, and 25 to this, and got this figure. Once you get it, this is after claiming the relief. Okay, but before you get this relief, we'll go to the notes. Okay, so now to relieve the marginal profit on this year, the company must first claim against the profit of the year ended 31st March 2025. Which year is the loss? 10. Next, so we'll straight away go and start seeing the option. Okay, so first the tax saving with the current and the carryback. First let's go with the current and the carryback and see. If you're doing the current year and carryback, okay, it's 110. Okay, you should have this in hand, current back and carry. So current back, look at your TTP, 191, 1500 and 362. One 1,500, 362,000, 3 years. So this is current carryback. So current 1,500 only you can claim. Here it was below the lower limit, so 19%. You can save tax. and you will waste your QCD unrelieved. This is at 0%. Okay. So now profits in the margin. Because here you are getting a marginal relief for this year, it's 26.5 in 2024. Here 2024 is the marginal relief. So 191. So what is the loss? Total loss was 110,000. How much did you relieve? 1,500. This is the total loss. Out of this 4,500, one you have wasted the QCD, the other one is the profit. So the remaining in 2020, see, always first current year carry back. This is the remaining profit. At this, it's the marginal rate. So the total tax saving is this. Now, second situation, loss is carried forward. So full 110 into the main rate. That's it, this one. Next, current year is made, but you don't carry forward. You don't carry back. You just carry forward. So current year is 1,500. This is same. QCD will be wasted. Here it will be same. 25. You will carry it forward and this. So this is the tax save. So which gives you the highest tax saving? The first option. So the director should claim carry back. Okay. As it gives the highest tax. As it gives the highest tax saving. This also gives the earliest relief and will lead to a repayment of tax for the year ended this much. So current year and carry back. Okay. This will give them the repayment of tax. How much? This much. This is from working one they got this, and from working two they have deducted. We'll see what is it. That is this. This is before loss relief. And this one is after relief. 18. So before relief, this was the corporation. After relief, this much of cash they will get. This much of tax will be repaid to them. So it's a cash flow for them. Isn't it? Now, so we can, now it's decided. So we'll first do the current year and then carry back. So once it is decided, then we'll do this working. So now, first this year, this is wasted. Then you go back this and you get this. And this is marginal because it's in between, and this is main rate. So at 25%. So even if the status is marginal, this will be taxed at 25%. Because look at the year at this rate. Okay. Here it was 25%. Okay, it was 191. So after tax relief also it will be at 25% only. Just because it changed, TTP changed to smaller. it does not mean that this will be taxed at 19. It's in between. So in between also is at 25%. If it's only less than the lower limit, less than 50,000 TTP, then only is 19%. Otherwise is 25 at marginal or main rate. So now, because you need a marginal relief, 250 minus this TTP 85,800 and the standard fraction, you deduct this and you get your corporation tax after the claim. This claim is decided based on your conclusion. Remember, first you have to come to the conclusion to do the working. Like this, you have analyzed all the 3 steps. This is little time consuming, but with practice you will get the knack of it. Now then you write these points. So the marginal claim, first claiming of the total profit the year ended, this uses 4,500 of the loss and wage QCD of 3,000, leaving this much to be carried back. This are all you have to write after you have done your workings here. All these are done first, then you have to write all this. So writing part comes after you do your calculation. The last part of this lecture is restrictions on loss relief. So when your trade becomes small or negligible in an accounting period in which it makes a trading loss, the loss can be carried forward against the future profit from the same trade, not against total profit. If the trade ceases completely, you can't carry forward the loss. Now, profit in excess of 5 million. So if you're having a profit of 5 million, or for a group, you can relieve it by carrying it forward, but the amount that you can carry forward is restricted to an allowance of 5 million a year plus 50% of the remaining total profit after deduction of this allowance. This applies to all brought forward losses, including brought forward capital losses. Okay, it is only for the brought forward losses. There is only one 5 million allowance to cover both trading losses and capital losses. Remember, one. It's not 5 million allowance. One 5 million allowance applies to both trading and capital losses. So the company or the group can choose how they want to allocate this allowance between the different loss types or different companies within the group. In the ATX, you are only required to have an awareness of these restrictions. You will not be expected to apply this to a scenario. That means you don't have to calculate. You just need to know that there is a restriction like this. Now, what happens when ownership is changed? In order to prevent tax avoidance, there are restrictions on the carry forward or carry back of trading losses. When there is a change in the ownership of a company, when there is no change in the ownership of company, don't worry, normal loss relief follows. But when there is a change in ownership, how much you can carry forward, how much you can carry back is restricted only for trading loss. So a change in an ownership means more than 1/2 of the ordinary share capital of a company is acquired by a person, ignoring any person acquiring 5% or less. So if you're having more than 1/2 of the ordinary share, if you're having 5% or less, you are ignored. A person could be an individual or a company. For example, let's say you are having 10%. You purchase another 60%. So the moment you purchase another 60%, you become an owner. You are having 70% now, which is more than 50%. Okay? As more than half. Okay? So in this case, how much? More than half means more than 50%. 60% shares you have purchased. This is a change in ownership. If you are getting from 10 to 30, there is no change in ownership. But 10 to 50, 10 to 60% is a change in ownership. Now, next change. One is change in ownership. The other one is major change in the nature or the conduct of the trade. It is important, trade did not change. It's just the nature or the conduct, the way of conducting the trade has changed. So major changes includes a major change in the type of property dealt or service provided, and major change in customer outlets or market. Restrictions applies in 2 situations. First, when there is both a change in ownership and a major change in the nature of trade of the conduct of the trade within a 5-year period, beginning no more than 3 years before the change in ownership, or when any time the scale of activity of the trade becomes small or negligible. Before any revival of the trade, there is a change in the ownership of the company. Any of this happens, restrictions will apply. Now, the restrictions prevents, what happens? The restriction prevents the losses before the change in ownership to be carried forward against the profit after the change in ownership. That means you can't carry forward the losses that you have now after new owner comes against their profit. It's the same trade but ownership changed. So there's a restriction. Next, losses incurred after the change of ownership being carried back before the change of ownership. So this restriction prevents that from happening. Now the summary. Before the summary, let us do a last question. Test your understanding tree. So you have to state the effect these changes are likely to have on the company's corporation tax loss position. All of the share has been acquired by him. They manufacture mobile phone, sells it to large retailer. They made heavy losses for last 2 years. Richard wants to make the following changes to the company over the next 3 years. Relocate most of the manufacturing activity overseas, expand company's product range, start to sell direct to the public over the internet, appoint 2 new sales directors. So tell me what these changes will have. So if you see, it changes the nature or the conduct of the trade. Ownership does not change, but the nature or conduct of trade changed. So because this change, what happens? And this occurs within 5 years. They have already told over the next 3 years. So because this change occurs within 5 years of Richard buying the company, and Richard became the owner also, because all the shares, 100% is acquired by Richard. So what happens? Any relief will be disallowed. Hello's loss cannot be carried forward to Richard. It will be disallowed. You see, Hello, they have been making losses for the last 2 years. This cannot be carried forward to Richard because there was a change in the nature or the conduct of trade due to this. They are selling new product. They are selling it over the internet. They are relocating it to overseas. So they are changing the nature of the trade and also the way they are conducting. Now, losses will no longer be available to carry forward. You can't carry forward loss. You can't carry forward the loss against the profit arising after the change in ownership. Ownership changed. Nature and conduct of the trade changed within 5 years. You can't carry forward Hello's losses to Richard. That's it. So now let us summarize this lecture. The loss relief. Types of relief. Current and prior year relief. You can relieve it in the current year and previous year. 12 months in the previous year or 36 months if you are seizing the trade. And that 36 months is on a LIFO basis, last year first. Total profits before QCD. If it's current or prior year, it's total profit before QCD, you can get it relieved. And you have to claim it within 2 years from the end of accounting period in which the loss arose. For carry forward indefinitely, also against total profit before QCD, have to claim within 2 years from the period when the loss is relieved. Now the choice of relief depends on the tax saved. You have to save at the highest rate. You have to avoid wasting QCD and the cash flow. Next is the timing. This is regarding cash flow. Okay, so if you carry back, you can get a repayment of tax. Next, restrictions on reliefs. If there is a change in ownership, there is a major change in nature or conduct within 5 years of change, and the 5 years starts up to 3 years before the change. Or your activity becomes small or negligible at any time before the revival of a trade. Okay. when there's a change in ownership. Now, so this either major change in conduct or rate becomes negligible, restricts the use of brought forward loss, okay, in a new company acquired. Next, non-trading losses. Capital losses only against gain. You can only carry forward. You can't carry back. Non-trading loan relationship deficit. You have to get it relief against current year total profit before QCD. You can carry back 12 months against interest income and carry forward against total profit before QCD. And also you can get it group relieved. Management expenses. Current year against total profit before QCD, carry forward against total profit before QCD, group relief, property losses. Current year against total profit before QCD, carry forward against total profit before QCD, almost all of the losses are carry forward against QCD. Wherever differences are there, like capital losses only gains, try to learn those. The rest all you can group them together. For example, management expenses, NTLR deficit, property losses, all are total profit before QCD, whether current or future. And get it group relieved. Not all could be group relieved. Some losses could be group relieved. So that's it for this lecture. Thank you for watching, and I shall see you in the next upcoming lecture. That is lecture 20. That is also on corporation tax. See you, and do not forget to subscribe to my channel if you haven't subscribed, and do watch the ATX playlist for the previous lectures. Thank you.